What's the biggest threat to your business? Is it tough economy? Well, how about death by 1,000 paper cuts? Slowly losing your profits to random costs and wasteful spending that you probably have never noticed. And then you ask yourself, why is my business not profitable? But what if you could catch all those inefficiencies before they end up sinking your ship? In this video, I'm going to show you the 4 most common money pits and the simple financial reports that act as your roadmap to plug them for good, so you can finally start keeping the profits you've earned. Hi, I'm Kate, and after years of working as a finance director and VP, and now consulting service businesses on financial operations, I've had my fair share of digging into the financials of businesses to hunt down these exact issues. And what I've found is that the problem is very often just a lack of financial visibility. So, let me show you now how you can get this visibility in your business. The first money pit is the software graveyard. We live in a world of SaaS, where it's very easy to sign up for a trial, pop in the credit card number, and then completely forget about it. A forgotten $20 personal subscription is an annoyance, but a forgotten $500 per month business software expense will add up fast. Studies have shown that a huge percentage of enterprise software, sometimes as high as 30 or 50%, goes completely unused. Yet, those subscriptions just keep auto-renewing. Think about that project management tool that you might have tried for a one-off project, or that social media scheduler that your team never ended up adopting. Each one is a recurring cost that you might still be paying. The solution is a software audit, and your map here is the profit and loss statement, or P&L. Go to the account or accounts where your business records software. Open the detailed report and export it into Excel. Create a simple list with 4 columns: the expense name, monthly amount, who on your team owns it, and when was it last used. Ask your team if they use the software and how much they use it. You may be shocked at what you find. Cancel these zombie subscriptions and boost your bottom line. Next, let's talk about the cost of unprofitable customers. Wait, what? Yep, you heard me. Not all revenue is good revenue. Some clients might actually be costing you more money than they bring in. That's a money pit disguised as a sale. You know them. They demand endless revisions, cause scope creeps, and take up huge amounts of your team's time, on top of paying their invoices late. By the way, those late payments cost your business too, not to mention the hit to team morale and your reputation. By the way, I'm not saying that this client is objectively bad. I'm just saying that they might be a bad fit for your business. Your map for this is the accounts receivable, or AR, aging report. This report shows who owes you money and how late they are. If a customer is always in the 60 to 90 day column, they are a strain on your business and a financial risk that can stop you from paying your own bills. First, use this report to tighten up your collections with automated reminders and firm late payment policies. Second, perform a client profitability analysis. Pool or estimate the hours that your team spends on your most demanding clients. Use them in conjunction with your team's loaded salaries to calculate the cost to you to service those clients. Subtract that cost from their revenue. The results will give you the data to raise your prices, renegotiate terms, or even fire them to free up your team for more profitable work. The third money pit is the miscellaneous expense black hole. Every business P&L has one, a vague category where unclassified, untracked, and often wasteful spending goes to die. Tossing receipts for coffee, a random tool, or a contractor payment into one bucket means you lose all visibility. The danger here is that it hides the trends. A recurring cost might go completely unnoticed for years, just because it's buried in this big, undefined expense category. The solution is to get specific. The map to fix this is a detailed profit and loss statement and your chart of accounts. I'll tell you here what I always tell my clients. Get rid of the miscellaneous expense account. Create specific categories like office supplies, software, professional development, or bank fees. When you can clearly see where the money is going, notice the trends, and spot redundancies, it turns your P&L into a powerful, cost-optimizing tool instead of being just a useless bunch of numbers. The last money pit that we're going to talk about today is sneaky, because it doesn't show up as a line item on your P&L. It's the cost of inefficiency. In a service business, time is your inventory, and every hour wasted on manual, repetitive processes is a direct drain on your profit. Think of the time your team spends manually entering data from one system into another, manually populating reports or invoices, instead of just using an automated or integrated system. Or the time lost because someone doesn't know where to find the right information and has to constantly ask for help. These little inefficiencies add up to major labor costs. Your map here is to connect your operations with your financial data. Look at metrics like gross margin by service line, or track how long it takes your team to do key tasks, like invoicing, compiling reports, or onboarding a new client. If one service has a consistently lower margin, or if something that should only take hours takes days, that could be a red flag for an efficient process. The solution is often investing in automation and integrated systems. Spending money upfront on software that streamlines workflows can save you a fortune in labor costs down the road, freeing up your team for billable work, expediting decision-making, or even getting you paid faster. You want to move from a culture of "this is how we've always done it" to one of continuous improvement, where you're always looking for ways to optimize your workflows. So here we are, the 4 very common but not so obvious money pits: the software graveyard, unprofitable customers, miscellaneous expense black hole, and inefficient processes. Now, the core message that I want you to get away from all this is one of empowerment. You are not helpless here. The solution is to consistently use and view your financial reports not as just boring, useless documents. Sometimes they are. But as a strategic map to guide your decisions. This turns your financial data into your greatest competitive advantage. Building a culture that values making decisions with data is what separates the businesses that just survive from the businesses that thrive. If this video was helpful, please hit the subscribe button and share it with whoever you think needs to hear this. Thanks for watching, and I'll see you in the next one.